Should institutional investors be concerned with cryptocurrency? This is what analysts have to suggest. Crypto is no longer just cool, it is becoming feasible. Cryptocurrencies have accelerated their meteoric climb in recent weeks, with alternate coins such as Ether and Dogecoin gaining ground on Bitcoin's main competitor. Though retail traders on social media are optimistic about the future of blockchain, the city and institutional investors remain divided on whether digital assets pose a business advantage or a whale-sized risk. Andrew Bailey, Governor of the Bank of England, told reporters on the 6th of May that investors in crypto assets should buy them only if they are prepared to risk all their profits. However, just hours after he spoke, Ether surged to a new record high of over $3,556 as traders seemed to disregard the threats. To learn more on whether cryptocurrencies have a place in the square mile, we spoke with some experts. Susanna Streeter, Hargreaves Lansdown's Chief Securities and Markets Analyst. Cryptomania is difficult to avoid when more speculators enter the chase for the next stellar hit, driving markets higher in the hope of spotting a contender that will follow Bitcoin's trajectory. Numerous crypto coins are being driven through this speculation slot machine on the promise of being the big disruptors of the modern payment system. However, who will emerge victorious in the future payments landscape remains a gamble, with fierce rivalry between emerging and existing players as the market undergoes rapid transition. Although some coins promise a given use case, demand is still mostly driven by traders looking to profit from a surge of price increases, rather than long-term investors confident in their growth as a medium of exchange. Traders who enter late in the hope of receiving heavenly prizes are likely to be bitterly disappointed when the price bumps down to earth. Volatility is the name of the game in the cryptocurrency universe, with coins experiencing weekly rollercoaster rides, and forecasting the stage from which demand declines and rates continue to plunge is extremely challenging, if not unlikely. Investors should exercise strict discretion when selling cryptocurrencies and can only dabble at the margins of their investment portfolio with assets they can afford to lose. Adam Grimsley, Aberdeen Standard Investments Investment Director of Private Credit. The primary reason city investors should be concerned about cryptocurrency is that it is the most obvious manifestation of how technology is altering how investors distribute their capital. Cryptocurrency has undoubtedly captured the interest and creativity of millennials. Earlier this year, Bitcoin reached $1 trillion in market valuation after just 12 years, compared to Apple's nearly 40 years. Although comparing Apple to Bitcoin is a crude analogy, both depend on technical acceptance to maintain their value. Cryptocurrency seems to be here to remain in some form or another. A large portion of the cryptocurrency industry is uninvestable and of little benefit to skilled investors. Having an interest, on the other hand, is very distinct from spending. The overwhelming majority of the cryptocurrency industry is uninvestable and irrelevant to skilled investors. Also, as the most proven asset class, Bitcoin remains untested, with very little trading liquidity resulting in wild price swings. Thus, astute, perceptive, and risk-tolerant digital investors may now be looking at what will become Crypto 2.0, at assets and ventures that can draw on the success stories of the crypto markets and use the early infrastructure, but still be built in a more institutional, investor-friendly fashion. There are certain to be some very fascinating prospects in this room in the future. Crypto assets such as Bitcoin and Ether are distinct. Bitcoin is truly a store of value or digital gold, while Ether is much more dynamic due to its support for smart contracts and decentralized applications. However, for skilled investors considering entering the cryptocurrency space, Bitcoin remains the dominant commodity and represents the most stable, clear, and managed segment of the sector. It remains the standard by which all other properties are measured. That is unlikely to improve anytime soon. Stephen Yu, Managing Director of the £780 million Blue Whale Growth Fund. As an equity investor, you do not need to own crypto assets to have a bearing on your portfolio and investment operation. For us, cryptocurrencies are more than an asset class, they serve as a barometer of a company's ability to grow with the times. The way a management team approaches cryptocurrencies, especially one in financial services, reflects not just their strategic strategy but also their capacity to execute. Visa and MasterCard, both of whom are in our top 10 portfolios, began funding cryptocurrency transfers this year after years of planning. PayPal, which is a smaller holding in the fund due to its cost, took this a step further by enabling customers to pay and receive payments in cryptocurrency, filing patents on the technology as early as 2018. The three firms began planning well in advance of the blockchain boom. We admire businesses that invest strategically in anticipation of opportunities. Danny Hewson, AJ Bell's financial analyst. For years, standard investors mocked blockchain adopters, but the latter are now the ones laughing. Values have risen dramatically, millionaires have been created, and mainstream organizations such as Sotheby's have jumped on board. When something that began as a prank becomes more valuable than businesses like Ford or BP, it warrants a second look. Cryptocurrency is no longer merely trendy, it is becoming feasible. It may be a case of fear of losing out, but when anything that began as a prank winds up with a larger market capitalization than Ford or BP, it warrants a second glance. Having said that, all of the reasons not to invest remain valid, but with many Americans unexpectedly receiving free money from the US government, speculating may appear less risky. And it is also conjecture in an environment ripe for oversight and potentially perilously close to a precipice. For all the highs caused by social media and television appearances, the true high may occur as interest rates begin to increase, eroding the value of flat money. However, as with any high, a correction is almost always necessary. There is no escaping the fact that the cryptoverse has upended the established order of things, and for that cause alone, all investors should pay careful attention. Jonathan Rowland, Executive Chairman of Mode, a digital asset manager listed on the London Stock Exchange. Recall that Bitcoin was the highest performing asset class in 2020 and is already considerably higher than it was last year at this time. Institutional funds such as BlackRock and JP Morgan have piled in, ensuring Bitcoin's long-term value. Governments and regulators are now beginning to recognize the importance of cryptocurrencies and the opportunities they have as an investment vehicle and a store of value. We've seen global players such as BlackRock and JP Morgan pile in, which bodes well for Bitcoin's long-term stability. Investors we speak with are highly concerned about losing out. While there might be uncertainty, Bitcoin is already at the top of the acceptance curve and therefore has a long development journey ahead of it. The bulk of our customers purchase Bitcoin for long-term holding, and we want to be bullish. We became the first publicly traded firm in the United Kingdom to make a major Bitcoin acquisition last year as part of our treasury investment plan to hedge against currency debasement. Investors seeking to protect themselves from rising inflation will turn to Bitcoin. When institutional investors continue to welcome cryptocurrencies and trading platforms give investors an exceedingly simple and efficient way to participate in the cryptocurrency market, coin values will continue to grow. Though Ether has seen a rally, Bitcoin is likely to maintain its lead as the most liquid, developed, and institutionally supported cryptocurrency. Bitcoin is not about short-term profit maximization, but rather about long-term value creation. For the sake of consistency, these comments have been revised and simplified. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.